Intrade is getting a lot of interest from investors who want to make a bet on who will win the 2008 presidential race, but they're also seeing a lot of trade on whether the U.S. will enter a recession this year. The Intrade, in fact, futures market now puts the likelihood of a U.S. recession in 2008 at 75%. What do they know that the economists out there don't? With us now is John Delaney, CEO of Intrade, and CNBC Chief Washington Correspondent John Harwood. Guys, great to have you with us, John and John.
Hey, Michelle.
John of Intrade.
Good evening.
Wait,
I just did that Michelle thing again.
I
Melissa.
know. That's okay. Jose, God. All is forgiven. All right, John of Intrade. 75% of recession, it's pegging a recession. That's a lot higher than a lot of economists on Wall Street. What's your track record? Why should we believe the trade on Intrade?
Well, the track record is good, not perfect. What I can tell you right now is that members are reading even the $145 billion stimulus plan as too little too late in light of the clear and present danger of a recession looming. A little bit off 75, around 73% right now, you know, coming on foot of very negative indicators from the housing market, from manufacturing, and even a Philly Fed at minus 20.9.
So what do the trades look like? Have they been more active recently? Have the odds been increasing in recent days? Give us some color on that. John Delaney.
Oh, very much so. Over the last month, you know, about a month ago, the market was trading at around 48, less than a 50% probability that the U.S. would enter recession in 2008, and we define that as 2 consecutive quarters of negative growth. Earlier today, it reached an all-time high of around 75, slightly off that now, trading at around 73%. So trending very much up towards its high, indicating a very high probability, but not a certainty, that the U.S. will enter recession.
Now, the other thing that this market, as we had mentioned, can or tries to predict is the outcome of the primaries. And John Harwood, let's start with you in the Nevada caucus. Who are the favorites? Because I want to compare it to what Intrade is showing. John Harwood.
Well, I think, Melissa, because Barack Obama has the endorsement of the culinary workers, which are very powerful in that process, we think they'll play a large role in the caucuses, that he may be considered the favorite going in, which would give him a boost going into South Carolina after that. But Hillary Clinton's been leading in the polls, so we really don't know who's going to show up, how heavy the turnout's going to be. So there's got to be some uncertainty about that. I'd be interested to see exactly how Intrade is pegging the odds on that one.
John Delaney, why don't you tell us the odds on the winner in Nevada?
Well, John and Melissa, I can tell you that our market currently believes that Hillary Clinton will win there. They give her a 60% probability of winning, and Barack Obama approximately 35% probability.
Wow. Okay, so let's move on to South Carolina. John had alluded to it. I mean, obviously a lot depends on what happens in Nevada, what sort of momentum goes in. But John Delaney, why don't you tell us what the people who are trading on your website believe who will be the winner in South Carolina?
Well, I think South Carolina, where the Republicans are concerned, John McCain looks strong, not certain. He's trading at around a 62% probability. Huckabee looks like he's going to do quite well there in South Carolina. But then even if we look back to Nevada, for the Republicans, of course, Mitt Romney looks to be very strong, trading with around an 80% probability of winning in Nevada.
Okay, we're going to leave it there. We'll see who comes out on top in terms of predictions. John and John, thanks so much for your time. And John Harwood, we're going to ask to stick around because the White House and Congress both want to inject some jet fuel into the economy to restore investor and consumer confidence. But is the tax relief President Bush called for this afternoon a real cure or just a temporary painkiller? John Harwood is still there at the White House with more on this. Hi, John.
Hey there, Melissa. You know, we don't know the details yet. The president didn't specify what his package was ultimately going to look like. But we do know that there now appears to be bipartisan consensus that something has to be done. The president came out today anticipating the concerns of conservative critics who say it's just politics, said the only kind of package worth doing is one with real economic pop.
This growth package must be big enough to make a difference in an economy as large and dynamic as ours, which means it should be about 1% of GDP. This growth package must be built on broad-based tax relief that will directly affect economic growth.
the Middle East.
Now, in fact, the president's package is big enough that it's larger than what Barack Obama or Hillary Clinton have talked about. Paulson said it would be about $150 billion, but he threw some cold water on the idea of including other things in the package, such as money for energy, for more senior citizens benefits, and even for unemployment insurance. Paulson said he wants a package without a lot of frills.
He made the decision. The Christmas season is come and gone. We're not trying to decorate a Christmas tree here. That a huge part of this is going to be speed. It's going to be getting money out quickly, and when it will make a difference. And if we can stay broad-based and simple, we'll be able to be quicker.
But it's important to note, Melissa, there are still potential sticking points here. Most particularly, what does exactly the administration mean by broad-based? Does everybody get it, including earners at the top end? And do people at the bottom who don't have federal income tax liability, are they going to get those rebate checks? All that is subject to being hashed out between Democrats and Republicans in Washington.
Yeah, anything that where you say bipartisan, there's always going to be sticking points. John
Exactly.
Harwood.